morning, traders. Welcome to today's Outlier Live, where we cover the biggest headlines of the day and what the AI trading data has to say about it. And our biggest story of the day is Nancy Pelosi. She just made a stock buy, and if you were buying it too, you'd have already been making tons of money out there. And our second story of the day is, if you didn't already have a mortgage, you probably don't want to be getting one anytime soon, at least for the next couple of years. Tune in for that and more on today's Outlier Live. Nancy Pelosi just bought herself some Nvidia call options, or at least that's what the rumors are floating out on the internet. And because of that, Nvidia stock prices have skyrocketed. I really think that the only reason that the price of Nvidia has been going up is because of Nancy Pelosi having a position in Nvidia, right? Shares of chipmaker Nvidia closed at a record high on January 8th after the company announced new microchips that will power artificial intelligence on PCs. Nvidia stock climbs 6.4%, trading at $522, the highest close ever on a split adjusted basis. And listen, I was following this and I was looking at it just yesterday, and I was talking about it in our trading room, and I said, listen, this is not a stock that I'm going to buy right now. The options premium on it was astronomical. I generally don't like to go more than $10 per strike. Or I should say, I don't like to pay for an option that's greater than $10 per contract. And I'd have to go like $30, $40 out of the money just to find one that would fit my price criteria. Not any other criteria other than being less than $10 a strike, which is pretty crazy, right? The rally was sparked by news that the company is launching new GeForce RTX Super series of graphics processors aimed primarily at video games played on laptop and desktop computers. I have an Nvidia graphics card that you and I are talking to right now. It's a little bit older, but maybe it's time for me to get a new one, right? I got an Nvidia 1660 in here. But yeah, I could definitely use a super series of RTX 40 something. Nvidia also announced the delivery of new AI microchips exclusively for the Chinese market, and the company gets a quarter of its revenue from China. New microchips were announced ahead of the CES Las Vegas show. Nvidia stock more than tripled in 2023, and I think that's where people are jumping on, right? A lot of people did really well at Nvidia last year. It was one of those darling names where all the AI stocks were taken off. And if you were in Nvidia, it more than tripled. And so I think a lot of people are looking at this again like, oh, here we go again. Here we go again. And in recent months, it's been range bound. So now that it's broken through that $500 barrier there, who knows just how high I can go. And especially with backing from United States Congresswoman Nancy Pelosi. So let's take a look at what the AI trading data has to say about Nvidia. In fact, we got a buy signal just yesterday, which is the reason I was looking at it just yesterday. January 9th, we got a buy signal. If you'd been following these signals from Outlier, you would have seen an astronomical 910% return. I can't even believe that's probably the highest one that I've seen on here. So if you want to get your hands on these astronomical signals, as well as save a ton of money, be sure to head to OVTLYRdeal.com. We are running a lifetime deal right now where you can get your hands on this for one low price and have lifetime access to these AI trading signals. Let's take a look at what the internet is talking about this today. Nvidia's options volumes have broken millions today, option volumes have broken records today. Call and put premiums are past the billions mark. That's exactly what I was seeing yesterday. Where's it at? The premium, just astronomical, off the charts. And that's why I didn't trade it, was because the price of the options had gotten so high that I'm like, no. I'm not trading this bad boy. No way. But let's see what people are talking about here. I'll wait until Nancy Pelosi buys new calls and then I'll just follow her strategy, right? That's what this person's going to do. This person says it's the Pelosi effect. Absolutely. Oh yeah, that's what's up. We're living in times we'll tell our grandchildren about the AI renaissance. And this person says, you know, this story is not going to end well. I think people who are overpaying for the options are definitely going to get a very, very rude awakening when it does come back to to normalcy, I guess you could say. Listen, if you haven't already gotten a mortgage, you may not want to get a mortgage over the next couple of years. My mortgage was like 3.5-ish%. And I'm not getting out of this house anytime soon, right? If I were to buy my house today, it would cost at least 4 times more than it did when I first bought it in 2016, because the price of the house has gone up and the cost to finance the house has gone up more than double. Sometimes it's been triple, right? What we're seeing here is a pullback in mortgage rates. However, Goldman Sachs says that they're planning on mortgage rates to stay above 6% all the way through 2025. They expect mortgage rates to fall to 6.3% by the end of 2024 and 6.0% by the end of 2025. Let's continue on with the story here. The firm's expectations will stay above 6% through 2025. Goldman expects the 30-year mortgage rates to drop by 3%. Fall slightly. Goldman previously expected the 30-year mortgage to be at 7.1% by the end of 24 and 6.6% by 25. So if you are in the housing market, I don't envy you, because now is not the best time ever to be buying a house. But at least the prices have come back down on the mortgage rates, right? They have definitely fallen, and the expectation is for them to continue falling. It hit a high of 7.79% in October. And these mortgage rates, they're just part of the problem. I mean, we've covered a story about how Gen Z has basically said, screw it, I'm not even going to try to buy a house. I'll just wait until my parents die and inherit their house, and then I'll have a house and I don't have to pay for it. And I don't know if that's such a bad financial decision these days, because like I say, my house has nearly doubled in the 6 or 7 years that I've been here. The financing cost has doubled and sometimes even tripled at certain places. And I know I couldn't afford to live here. So how could we expect Gen Z, who's just getting out of college, who's just getting into the workforce, who's just doing their best to find a job to keep up with inflation, how are they even going to have the chance to save up enough money for a down payment? 20% these days, we're talking like $100,000, $200,000 in some places. You've got to save that up just to get your mortgage, which for a lot of people seems like nearly an impossibility. So they're just giving up on the housing market. And by giving up on the housing market, maybe that's going to slow mortgages down even more, which will pull the rates down. But that was Jerome Powell's whole initiative, right? That's kind of the point of raising rates, is to slow down all this spending, slow down all this buying. And now we're taking a whole generation of people who say, you know what? It's slowed down so much, I'm not even going to be in the pool of buyers for a mortgage. I'm not even going to own a home. I'm just going to wait. I'm just going to hold out hope that one day my parents will let me inherit that. Let alone, let's say that they have a big family. Maybe they have 4 or 5 siblings. Somebody's going to get the house, and I don't know about the rest of them. A continued decline in mortgage rates would help marginally improve housing affordability, but it won't be enough to completely unwind the sharp increases seen in mortgage rates over the last couple of years. Lower mortgage rates should bring stability to the mortgage-backed securities market and boost mortgage originations to $2 trillion in 2025 compared to $1.5 trillion in 2023. Much of that growth in mortgage originations is likely to be driven by heightened refinance activity. Absolutely, right? All these people who are getting these 6, 7, 8, 5% mortgages, they're looking at people like me with a 3.5% mortgage saying, man, if only. And if ever rates ever go down, I'll be refinancing those suckers as fast as I can. I'd even heard stories of people taking $9,000 a month mortgages, $9,000 a month just for your mortgage, right? If you can afford a $9,000 a month mortgage, you must be balling out of control, because you still got the rest of your life to pay for. But then they're saying, this is going to hurt for a while, but once we can refinance, we're going to do so. Now, granted, I don't know if they're going to be able to keep the mortgage long enough to refinance it, but a lot of people are eyeballing that right away. And maybe they're even starting to take a look at, hey, if I can save 2 percentage points on $1 million, I might want to do so. So let's take a look. We're talking about Goldman Sachs here and their predictions. So let's take a look at the AI trading data for Goldman Sachs. In fact, we just got a sell signal today On today's list of sell signals, we got a sell signal for Goldman Sachs. And if you had been following these signals, you would have seen a signal return of 167.79%, which is a really outstanding return here. So if you want to get your hands on these signals and have these outstanding outstanding AI trading data signals sent to you every single day, be sure to head to OVTLYR.com. That's OVTLYR deal.com to get a one-time lifetime deal for just $79. You'll have access to this as long as the company stays open. As long as the doors stay open, you'll have access to this. So again, that's OVTLYR deal.com to get your hands on these incredible types of signals. So let's take a look at what the internet is saying about this, right? Mortgage rates will stay above 6% through 2025, says Goldman Sachs. The Navy Fed is offering 5% for VA loans, so it's already coming down. If rates are already coming down, this should be indicative of the fact that the economy is struggling. It is struggling. We've all seen it. We're all fighting this inflation. And if rates are already coming down, that means that the mortgage market is saying the only way we're going to be able to capture this business is if we start cutting rates, right? The mortgage industry tries to keep a spread generally to the 10-year. And if rates are coming down, they're saying we're going to be losing business hand over fist. So we got to do something about this right now. And let's see what else we're saying. Guess we'll see when no one's buying homes except hedge funds. Yeah, there's going to be a lot of damage done out there by these really high mortgage rates. And I'm curious to know, let me know in the comments down below, are you interested in buying a home these days? I mean, you may be in the position where you have to buy a home. And if so, how are you navigating this mortgage market? And while you're at it, click one of these two videos. YouTube thinks you're going to love them because the algorithm just knows exactly who you are, and it knows one of these is the best video for you to watch today. Thank you so much for watching today's Outlier Live. We'll see you on the next episode.